take into our fundamental guest. Joining us now is R. Sreesankar, Head of Institutional Equities at Prabhudas, Lilladher. Sri, good afternoon. Thank you so much for joining in. It's just that time of the year wherein, wherein anybody who's listening to us right now is trying to figure out what his portfolio strategy should be for the next 12 months or maybe 24 months if they have such a horizon. What are you advising to your clients at Prabhudas Lilladher?
See, we have had a steady recommendation to our clients in terms of what's our outlook for the domestic economy, and based on it, what is the kind of recommendations that has been going on from our house. But at the same time, one has to take into cognizance of the fact that what's happening around the world. Your commodity prices have come down and it's still continuing to move down. So we are not sure whether we have seen the bottom of it or whether we are yet to see the bottom. So now that being the case, that the entire sector in terms of commodities, you've got portfolios in terms of whether it is steels, oil and everything, crude, to name it, steel, and then copper, and aluminum. That entire portfolio of commodities is a strict no in terms of an investment today. That's one of the recommendations. We are an underweight on that sector. That's number one. Number two, domestic economy, we still continue to see the domestic economic story continuing to perform very well. Couple of big advantages for the country like India, where we have seen the fall in crude prices aiding over, pick a number, anything from 60 to 80 billion in terms of a huge gain in terms of fall in crude prices. Those kind of numbers has to have its effect in the economy. You've seen that effect in the economy in terms of fiscal deficit consolidation. Now, or reduction. That's one part of the story. Second part, the consumption. Next year, you're going to see your 7th pay commission, impact of it, the benefit of it from the consumer's perspective, from the people who receive the pay commission benefits, increased incremental salaries for them, disposable income, so leading to consumption. So we are optimistic from that point of view. I mean, that consumption will include your automobiles, you name it, and you should have to see that improvement being seen in the domestic economy. Third is, again, in an economic growth, public sector investment is required, private sector investment is required, net exports is required. So your global economy is not doing that great. So from that point of view, exports will remain subdued. And you're not seeing, because there is an excess capacity created, you're not seeing the huge amount of private sector investment which is happening, which means that the public sector investment has to become higher from the government investment. So you are actually seeing now, whether it is in terms of the road projects, etc., the larger number of orders getting released, and once this becomes, these orders will get into actually implementation, i.e. construction of roads and etc. That's when the bigger kicker in terms of the benefits of the huge consumption will start to pick in.
Right.
So I think we are all in all optimistic over the economy, and
Sure.
This is where what we have been recommending to clients.
Right. Talk about the market outlook as a overall. Now that we are moving sideways and pretty close to the finish of 2015, what's the kind of rally or what's your outlook for markets in 2016? And would you expect some pre-budget rally also to happen on Nifty, and the key levels that one should be monitoring in 2016?
See, I'm not a technical analyst, so I wouldn't come back with any key levels in terms of technicals in terms of the market. But on a fundamental side, when we look at the market per se, as I said, India has had a relatively, for a dollar investor, a good year. Because emerging markets, when you look around, the market wouldn't have performed, but the currency has been relatively stable. So the returns in US dollar terms for an investor has been, if you find the losses that elsewhere in emerging markets, the carnage that have taken place, India has been a safe bet. That's number one. Number two, how is the scenario going to pan out in 2016? I think the global growth estimates have been revised downwards. If that global growth estimates revised downwards, I think the Indian growth estimates also needs to get revised slightly downwards. So we probably may have around 7% growth or anything around that, give or take certain levels. Then you're going to see an environment wherein domestic economy stories, the EPC construction companies continue to be in the in the limelight will keep seeing orders in infrastructure. Consumption stories, be it in terms of more in terms of two-wheelers, cars, etc., will continue to do well, and that's what we are betting on. In our topics, we have Maruti, we have Tata Motors continuing to be there, and in the infra space, we have Ashoka Buildcon, we have Sadbhav Engineering, among other infrastructure companies, and also you got consumption companies plus logistics. And all these, the benefit of 7th pay commission, when it will start to come in, you will see a plethora of companies continuing to benefit. So we are overweight banks because the benefit should be seen in banks as well as the economy grows,
right,
plus a number of companies which continues to come from there.
Sri, an interesting one is, I know you mentioned a few. Actually, Ashoka Buildcon is something that a lot of people I hear are finding favor with. But I want to first talk about Aurobindo. I believe you have a favorable view there. Now, why Aurobindo compared to any of the other pharma players? Again, the market is giving its verdict to it's trading at highs while the others are not.
I'm not sure whether that's the right statement to make, because the way is, Aurobindo has not been recommended by us at this price. Aurobindo was probably recommended at a price from probably 230, 300 onwards. So now you have been consistently following Aurobindo. Aurobindo has been a part of our topics for so many quarters right now. So we believe that Aurobindo is continuing to deliver. As they continue to deliver in terms of new approvals, they get new approvals, new products, the continued the level of the profits going up, and we will continue to see the importance and the investors getting interested more and more into Aurobindo, and that's where the valuation is going to become more higher and higher for this company. That's number one. Number two, I think Aurobindo's valuation vis-a-vis a lot of others is also not very high. In fact, for whatever has happened earlier, Aurobindo has been quoting at a, if I'm not mistaken, a discount to the peers in the market. And third point, again, it's not Aurobindo alone in the pharma pack that we have in our topics. We have got Aurobindo, we have got Glenmark, we have got Jubilant Life Sciences as well. So it's not it's not to say that we like Aurobindo when we don't like others. But if you look at our topics recommendation over a period of time, at some point of time we have had Reddy's in our portfolio, Cipla in our portfolio, and Lupin also in our portfolio. But over a period of time, for various reasons, and Sun, not forget Sun. So for various reasons, these have gone out of our portfolio, and many of them have even underperformed for various reasons that we have.
Okay, Sri, no, I didn't mean this is a fresh recommendation. I was just saying that Aurobindo seems to be a good idea to do. But Sri, thank you so much for taking the time out and joining us today, and from all of us out here, to you and your team, have a great 2016.
Same to you, and wish you also, you and your team, a very happy 2016.
Thanks so much. That's well, very interesting. And if you wanted some interesting thoughts and ideas for a portfolio for 2016, you've gotten some. He mentioned